7702 is the first of three critical tax codes I think would be in your best interest to understand. The second two were 72E and 101A. This one's just going to be 7702. So we'll look at its actual core. I have the actual Internal Revenue Code here. We'll look at, so what actually is it? What does it mean? Second, we'll look at its history. So why does it exist? Like, can it change? What if it does? What does that mean for me? Those are all good questions and very important to understand. We'll look at those. And then third, we'll look into how does this actually work in practice. Hi, I'm McCluskey and welcome back. It's one of my desires to make these videos as helpful and informative as possible. So do me a favor at the end, please, and leave some feedback. What could I have done better? What stunk? Whatever. Thanks. So first, we'll look at what 7702 actually is and look at the code. So first thing to note here is that it's not as simple as how to access your money tax-free out of an insurance policy. It's a little more complicated than that. It's very large code. Now, what's important is, so it's Chapter 79 of the Internal Revenue Code, subtitle F, is what 7702 is under. That covers 7701 to 7800. Now, what all of Chapter 79 goes into, the title of it is just definitions. So every tax code from 7701 to 7800 is something or some sort of definition. 7702 at the very top says as simple as life insurance contract defined. So that's all it is. It's defining a life insurance contract. It's not some sort of here's how you take tax-free loans and get rich. Not how it works. It's a long code of boring legislation telling you what actually is life insurance. Now, I'll read the first one here for reference, but for purposes of this title, the term, quote, life insurance contract means any contract which a life insurance contract under the applicable law, but only if such contract, 1, passes the cash value accumulation test of subsection B, or 2, meets the guideline premium requirements of subsection C and falls within the cash value corridor of subsection D. So again, you're probably like, okay, nice, cool, what does any of that mean? We're gonna look at number 2. So that's that it has to fall within the guideline premium requirements and then a certain cash value corridor. We're gonna get more into this, into the history of it here now. Okay, so second is gonna be its actual history. So why does this exist? Can it change? Has it? What if it does? All good questions again. It was established in 1984, July 18th. And again, the reason for this is to define what a life insurance contract is. Now, again, it might seem silly, but the reason for that is, well, what happens when I have $15 million and I say, oh, I'm keeping this in a bank or a credit union that's giving me, let's say, 3%. Can I move it all in one swoop into an insurance contract for $15 million and $1 worth of insurance and get your tax-free benefits? Well, what was happening, and this happened all throughout, I'm going to say 1980 or 82, all the way through 88 until TAMRA was passed, the Technical and Miscellaneous Revenue Act. But what was happening is people were dumping in a bunch of money for however much insurance. So let's say someone dumped in $500,000 for $550,000 of insurance. Well, they just moved all of that into there. Now it's growing tax-free, and the bank and credit unions are saying, well, hold on. We don't want everyone pulling their money from us. Right? Because also the banks and credit unions, they were doing this, right? A lot of their tier 1 assets are in bank-owned life insurance or corporate-owned life insurance. Now, what's cool is if you were in that period where you put a bunch of money in, you were grandfathered in. So nothing changed, even though that's changed now to where you usually have to spread that out over so many years. Those people who did get in one swoop, they're still good. They're grandfathered in. So that's going to go into our next question of what if it changes? And it has many times in 86, 88, 2017, and 2020. We'll do different videos maybe on some of those changes, but it has changed, and all of the people that had done anything before were grandfathered in. So to answer the question, what if it changes? Will that affect me and screw me over later? The answer is it hasn't happened. And then lastly, will it continue to change? Will it ever get to a point where IUL or whole life isn't really even an option anymore because it's just so regulated and there's so many rules? I have my doubts. Now, will it continue to change? Of course, I think so. I really do. Everything continues to update as more tax codes come out, But with banks and different corporations actually putting their own money into insurance, the government knows about this, of course. I really see it as improbable. But again, I guess we can never actually know the answer to that question until it happens. Third and finally is just how does 7702 actually work in practice? What does that mean for me? Now, again, this goes back to where people will say 7702 is simply how you can access money tax-free out of an insurance contract. Obviously, as we've seen, it's much more complicated than that. But what it does do is it gives you information for when I'm pulling money out of my policy, whether through a withdrawal, which I think would be silly, or a policy loan. How can I make sure that I still keep things within the confines of an insurance contract? Can I dump more money into my policy 20 years into it? Well, 7702 tells you that, right? So for example, just to get into an example with the policy loans, let's say you had $500,000 in there, you put it in 5 years, you had, let's just say you're 60 and you're healthy, maybe you had $1.2, $1.3 million of insurance. 10 years later, you've now got to the point where there's roughly $1 million in there, let's just say. So that's grown technically tax deferred, but you could access that tax-free through a policy loan, or technically you could access your first $500,000 through a withdrawal, and you wanted to do that. So if you, let's say you just loaned out $100,000 from that, is it still a life insurance policy? Is it still under the definition of it? The answer in that case would be yes, and that's what 7702 outlines. So in the end, 7702 is not a one-line code, right? It's much more complicated than that. It's much more boring than people make it out to be. Maybe that's why people say 7702 is what it is. It's just telling us, what is a life insurance contract? How can I make sure that when my money's growing, I can access it and still be in compliance with the Internal Revenue Code and really use this to boost my retirement and help me have tax-free income. So that's 7702. Pretty boring, but hopefully informative and helpful. Let me know if you guys have any questions on this, and I will see you guys in the next video where we'll go over 72E. See you there. Subscribe.